That's been the story for the last 20 years. India has looked attractive and it's not been cheap. Over 10 years, 20 years, 30 years, no other emerging market has remotely approached India in sorts of returns the country has generated. And if you look at the last decade, other than the United States, this is the only other market to have generated in excess of $2 trillion of returns. Focusing on the here and now, what you're seeing is a country clocking GDP growth of 7%, 8% at a time when the world is clocking 2%, 3%, if that. And if you translate that into earnings, as you just mentioned, referenced in the case of HDFC Bank, you're seeing large companies the size of HDFC Bank or Asian Paints, clocking earnings growth of 20, 30, 40%. There is no other market emerged or emerging at this scale, growing at this rate. And therefore, I think the valuations are more than warranted. We're obviously big bulls on India. We heavily invest our money, our family's money, and that of Western pension funds, Western endowments in the Indian market.
Right, but would you extend that argument that would hold true for how the banks in India have looked attractive, how the IT sector in India has looked attractive, and how historically we've just seen a lot of money go into the consumer space, so demographic dividend really playing out. It doesn't seem like, from a foreign investor standpoint, there's much breadth to investing in India. But do you think that is changing at this point? I wonder whether people would go into infrastructure, whether people would go into, innovative sectors, healthcare in India.
So I think the three developments vis-a-vis China's demise really as an investment destination. I think China has really shot itself in the foot in the last 5 years, and that's creating three sorts of trends in India, which is broadening the market. First is API and pharma. China makes 80% of the world's active pharmaceutical ingredients, and given the hostilities between the United States and China, there's obviously big focus from American pharma companies to shift away from China towards India, and that's creating a massive boom in both APIs, active pharmaceutical ingredients, and the intermediates which feed into APIs. I reckon this will be a $40-50 billion opportunity by itself over the next 3 years. The second is electronic manufacturing. As is well known, Apple is making a big move to shift away from China towards India. The iPhone 15, the launch day iPhone, was made in India, is made in India. Apple itself makes $200-250 billion of phones and pads, and if a quarter of that moves to India over the next 3-4 years, you get a $50 billion electronic manufacturing services, the entire supply chain feeding into phones and pads emerging here. And the third area has been for a long time outsourcing. As the West runs out of trained labor, not just for IT, but for HR, payroll, audit, marketing, all of that work is moving to India. The Indian IT services sector is roughly $250 billion today. I reckon 4 or 5 years hence, it'll be touching close to $1 trillion. So plenty to do in India beyond banks. Banks and consumer, as you rightly said, Tanveer, have done well for many years. They continue to do well, but the economy is coming along nicely as the world's fifth largest economy keeps growing at 7% in real terms. There are plenty of opportunities beyond banks and consumer to look at.